The next dollar is here, and most people haven't even noticed.
Right now, stablecoins is a $250 billion industry.
And so stablecoins are digital dollars.
I'm a believer in stablecoin.
There's going to be a lot of stablecoins.
Every day, people tap their phones to pay, send money via apps like PayPal, or trade online, often without realizing a new form of digital dollar is powering many of these transactions behind the scenes. This change has been subtle but massive. In 2024, dollar-backed digital tokens known as stablecoins processed about $27 trillion of transactions. In other words, a huge chunk of dollars is now moving on crypto networks instead of through traditional banks. The world is changing, and today we're going to be talking about what is happening, how major payment players like Visa, PayPal, and Stripe are already incorporating this, and finally, how this will affect your finances. This might be the biggest shift in money since the rise of the internet, and is already happening right under our noses. But what even is a stablecoin? Stablecoins are essentially digital cash. More technically, a stablecoin is a special type of cryptocurrency whose price stays steady because every coin is matched with a real-world asset. Take USDC for example. This is a dollar-backed stablecoin. So for every one USDC issued by a company, the company holds one actual US dollar in reserve. So say I'm a financial lender and I lend you 100 USDC. There will be 100 real US dollars parked in my bank to back it up. Whenever you want to trade your USDC for dollars, those dollars are waiting. This one-to-one backing is what keeps USDC flat at $1, unlike volatile coins like Bitcoin. Now, this is important because when it comes to everyday money, stablecoins solve problems that Bitcoin and online banking never could. Now, Bitcoin was the pioneer of digital currency, but its wild price swings meant it could never work as a routine payment method. On the other hand, whilst online banking seems like a perfect solution, in reality, it's far from it. Stablecoins, by design, avoid these pitfalls, and they're going to change how we use money forever. So let's talk through it. The first game-changing aspect about stablecoins is that it's money that moves at internet speed. Stablecoin transactions settle in minutes, even seconds, at any time of day or night. There are no banking hours or holidays on crypto networks. You could send money at 3 AM on a Sunday and it would go through. By contrast, traditional bank payments only clear during business hours and can take days, especially across borders. Online banking may look instant. Your app says sent and your balance drops, but the money still has to crawl through the banking pipelines that run only on business days. If you've ever tried to send money to your family overseas, then you know the drill. Your cash can take 1 to 3 days to get there. With a dollar-pegged stablecoin, that same transfer will ride the internet's rails instead of traditional banking wires. Your relative sees spendable money in minutes, any hour of the day. As an industry analysis puts it, stablecoin transfers are faster than a wire and cheaper than online banking. And they work just as easily across borders as they do next door. And that brings us to the next big thing. Stablecoins can move money directly between parties, completely bypassing the middleman banks that traditional transfers rely on. Today, if you send your money abroad, it will hop through multiple banks, each taking time and fees before reaching the end recipient. With stablecoins, money goes straight from your digital wallet to theirs, typically for only a few cents in network fees. And the crazy thing is, they're already here. You may have even used a stablecoin without realizing it. That's because big financial apps and services are already integrating this into the user experience. Take, for example, PayPal's digital dollar. In 2023, PayPal launched PYUSD, a US dollar-backed stablecoin, bringing crypto dollar technology into mainstream payments. PayPal users can buy and transfer PYUSD in the app. They can send international payments within minutes at 90% cheaper rates, and the market has already topped $1 billion. Another crazy case is crypto payouts for online creators. Online payment processor Stripe now offers crypto payouts, allowing creators on platforms like Twitter to receive earnings in USDC. A freelancer in one country can get instantly paid in a dollar-backed stablecoin, avoiding delays and the fees of international bank transfers. This is revolutionary. Even Visa, sees the potential of stablecoins and has already cleared more than $225 million in live USDC settlements. Visa's chief product officer has even stated that every institution that moves money may need a stablecoin strategy. In all of these cases, stablecoins aren't some random crypto experiment. They're being used now, but that's not all. In one of the biggest signals that stablecoins have arrived, last month, a landmark US law has been passed that brings stablecoins into the regulatory fold.
The Genius Act.
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 The name stands for Guiding and Establishing National Innovation for US Stablecoins, and it builds a framework for legally legitimizing stablecoins as part of the money infrastructure, no longer operating in a legal gray area. A well-regulated stablecoin can now integrate with banks and payment systems with far less uncertainty. As the World Economic Forum has already noted, this landmark legislation legitimizes the asset class, enhances consumer protection, and reinforces the US dollar's dominance in the global digital economy. Now let's bring this all together. How will all this high-level change affect your daily life? Well, quite possibly in significant ways. If stablecoins continue on their current trajectory, they could reshape how we all interact with money, banks, and the economy. Here are a few key implications. Today, most people rely on banks to move money, writing checks, sending wires, or swiping debit cards. Stablecoins introduce a model where you could hold money in a digital wallet and send it to anyone instantly. If you can pay your rent, split a dinner bill, or buy groceries by transferring your stablecoin from your phone, you might question why you need banking apps in the first place. In the world of stablecoins, banks may have to reinvent their role. They likely won't disappear, but instead they'll integrate stablecoins or provide custody for them. But they would probably lose their monopoly over the payments pipeline. Financial experts are suggesting that as digital currencies gain traction, traditional banks will have to learn to adapt or risk being left out. And you have to think, if this becomes the new norm, imagine a world where cash is used as rarely as paper letters in the age of email. We're already seeing a decline in physical cash usage, and stablecoins will only hasten that. With stablecoins, anyone with a smartphone and an internet connection can hold and transfer stablecoins globally, even if they don't have a bank account. This is a big deal, especially for the 1.4 billion unbanked adults in the modern world. Evidently, all trends are pointing to a future where money is predominantly digital, and it won't be Bitcoin or other volatile cryptocurrencies that will dominate everyday transactions. But it will be fiat-pegged stablecoins that become widespread as the economy goes fully digital. That's it for today's video. Tell me what you think about the new dollar in the comments down below, and don't forget to like and subscribe. I'll see you in the next one.